Since the late 1960s, lumber futures have been the best way to approximate the price of lumber that we all pay at the end of the supply chain. And if we look at lumber futures prices over the past 5 years, we can see how prices have fluctuated wildly up and down due to various problems, from transportation issues to COVID shutdowns to worker shortages and more. For the past few months, though, lumber prices have really settled down quite a bit, but things are changing. Stick around and I'll explain what's going on. So as I mentioned in the intro, lumber futures are the way that we understand what is happening with lumber prices. They are a leading indicator of the wholesale prices that are paid by Lowe's, Home Depot, and other lumber yards, and ultimately the prices that we all pay. Now, I have gone into great detail on lumber's futures in previous videos, and so I'm not going to go into a lot of detail here, but in order to understand what's going on, there are a few things about lumber futures that you do need to know. First of all, lumber is a commodity, or a good that's used to produce other goods. Commodities markets are generally run by the Chicago Mercantile Exchange, or CME. This is essentially the stock market for commodities like crude oil, precious metals like silver and gold, or base metals like copper and iron. Even agricultural products like beef and pork, wheat and rice. Lumber is also traded on the CME. The way that commodities are traded are either as futures contracts or options contracts. A futures contract obligates a buyer to purchase and a seller to sell and deliver a predetermined amount of a commodity at a specific price and at a specific future date. It's a binding agreement. An option, on the other hand, gives the buyer the right, but not the obligation, to buy or sell a commodity at a specific price and at a specific future date. Now, trading commodities is not just for Wall Street bros.
Sell.
There are a lot of legitimate reasons why people and companies would want to trade commodities. For example, airlines use a ton of fuel and may buy oil options or futures to better predict their costs over time and to hedge against huge price increases. A car manufacturer may do the same thing with something like steel, or a company like McDonald's may do the same thing with beef and with grain. For lumber, you may have sawmills, wholesalers, retailers, and home builders all participating in the lumber futures market. So let's talk about a futures contract using a home builder as an example. So let's say that a home builder plans to build a few houses. It will take a few months between the time that the plans are drawn up and approved and between the time the foundation is poured before they're ready for the lumber. And if prices go up during that time, they're going to lose money. So they may want to buy lumber futures now to be delivered at the time that they're ready for the lumber to hedge against that higher price that could potentially take place at that point. Okay, so now that you understand what a lumber futures contract is and what it's for, let's talk about what the big changes are and what this might mean for the future of lumber prices. So as I mentioned before, the CME is where these contracts are traded, and they're the ones who get to set the rules. Well, they're changing the rules. Here is a list of the things that are changing. One of the most significant, and the thing that pops out to me the most, is the size of the contracts. In the past, one contract for lumber futures was 110,000 board feet, which is essentially a rail car full of lumber. Now the contract has been reduced to a fourth of what it was, or 27,500 board feet, which is a truckload of lumber, or roughly the amount of lumber needed to build the average home in the US. Another one of the changes is the delivery point, which in the past was in British Columbia, and it was paid as it left British Columbia, meaning that additional transportation costs for getting it from BC to wherever it was needed was not taken into consideration as part of the cost of the lumber futures contract. Now the delivery point is in Chicago, which is a central point for both Eastern and Western lumber. Another change is that they're expanding the types of lumber available, the species that grow in the East and in the South, and not just the things that grow in the Pacific Northwest. So what does that all mean? Well, it means that lumber futures are going to be easier to trade. They're more liquid. The smaller contracts make it so that smaller lumber yards and home builders can more easily participate in the market. The central hub makes the delivery more accessible, and the expanded species trading reflects a change in the source of lumber supply from the Pacific Northwest, where lumber mills are closing, to somewhere more central. But what does that mean for lumber prices? Well, the old contracts stopped trading earlier in May, and the new contracts have been traded since August. Here is a graph showing the old lumber futures and the new lumber futures side by side. What's interesting from this graph is that the new futures prices are consistently about $100 higher than the old futures prices. Experts say that this is due to the cost of transportation to Chicago, which presumably was being paid anyway, but not as part of the futures contract. I also suspect that part of it was that the old option contract became more thinly traded as it came closer to ending, which depressed the price a bit. So here is the bottom line. I think these changes are good. They make the market more liquid. They make it easier for people to get in and out of it. And they allow for more trading, which will even out the extreme highs and the extreme lows that we've seen in the past few years. Basically, it should make the lumber trading market more smooth and more responsive, and also allow more people to participate in it. I read an article from a trader who was talking about how they have received a lot of interest from much smaller companies. Companies in the past couldn't afford to participate in the futures market, but now can because of the size of those contracts. So is this going to lead to increased prices that we pay ultimately as an end consumer? I personally don't think so. And let me tell you why I think that. Every time that I head to Lowe's or Home Depot for anything, I always go to the lumber just to check it out and see where it's priced. I've been doing it for a while now, and I've gathered a lot of data. So let's plot some of that data against the graph of the old lumber's futures prices and the new lumber's futures prices to see what we get. In looking at this graph, you can see that the retail prices shown on the right side here follow pretty closely with the lumber futures prices, with maybe a bit of a lag. A little over a year ago, a prime 2x4 was over $6 a board. Now that has changed a lot, and since around December of last year, a 2x4 was selling at under $4, and for the past 3 months, it's remained relatively unchanged at around $3.35 per 2x4. That is the lowest consistent price for a 2x4 in the past 3 years, and the higher cost of the new lumber futures contract has not impacted it. Now, you can all tell me if you think that I'm wrong, but in my view, aside from the decreased volatility, which is a good thing, I don't see these changes as having a significant impact to prices either up or down. If anything, I think that it makes things better. Anytime that you democratize a market, anytime you make it easier to get into or easier to get out of, easier for smaller people to trade into, I view that as something positive. What will impact prices going forward is going to be factors that impact supply and demand. And since this video is already getting a little long, that's going to be a topic for another day. And so in my next few videos, I'm going to talk about those factors, the factors that impact supply and demand, and what that will mean for lumber prices going forward. So be sure to subscribe to my channel in order to see those videos. I also have some videos planned on hardwood prices and plywood prices, so be sure to stay tuned for those. Thank you for watching. If you found this video interesting, please be sure to like it and subscribe to my channel. We'll see you in the next one.